Bank of Japan's UA was speaking overnight, saying that food inflation was helping to kick up inflation in Japan, but he thought it was just temporary and was a reason not to tighten monetary policy. That sent the dollar versus yen to the upside, the yen lower. But since it's recovered back to the downside after his chirping was over, the euro versus US dollar is confined to a very narrow trading range. Pound versus US dollar has moved to the up or to the downside and trading here today, but is off its lowest levels after breaking through a key moving average support level. I'll go through all this and more in this video, so let's get started. Looking at the hourly chart of the euro versus US dollar, the trading range in today is only about 25 pips. That compares to about 85 pip average over the last month of trading. So very narrow trading range. As you can see, the low price that we saw in trading here today matched the low price from yesterday, or very near it, and that was near the high of this swing area through here, which just encompasses some different swing highs and lows through this period right here before moving to the upside. Came down to that area yesterday, found support buyers, and then did it again today, not once but twice. So there is something about the 1.0776 level. It probably goes back in time as well, back through here. So be aware of that. On the top side, this falling 100-hour moving average is now equal to the 61.8% retracement. That 61.8% retracement, I do have to go to the 4-hour chart, is of the move down from this September high to this January low. The 61.8% retracement comes in at 1.08174. And as we saw on the hourly chart, that moving average is right around that level. This is the 100-bar moving average on the 4-hour chart. That's still moving to the upside as a result of this trend move higher. We haven't retraced to the 38.2% retracement of this move to the upside here. That is back down at the 100-day moving average. I'll switch back to the hourly chart to show that area. That's this level right through here, 38.2, and the 200-day moving average. That would happen if or that would be the next key target, obviously, if the price were to get below this swing area through here. Right now, we're seeing the floor at the 77 level. In the euro versus US dollar, and we'll see the ceiling up, or we will expect the ceiling up here near the 61.8, near the 100-hour moving average, and down here is the next key level, down here at the 38.2 and the 200-day moving average. Those are three key levels for the euro versus US dollar. Let's take a look at the dollar versus yen. As mentioned, the U8's comments helped to weaken the yen. We saw that rise to the upside during the Asian Pacific session, but in the European session, we've seen a rotation back to the downside. That rise to the upside took the price above this swing area through here. A number of different swing lows and highs going back in time through here, and it probably goes back further as well. But you can see the number of different times the price came within this area and found either support or resistance. I returned back to it here, found sellers, moved above it here. Looked like it was going to go higher. It did, but fell short of this trend line up through here in 38.2. Fell back below in trading yesterday through here, down test the 100-hour moving average, which, by the way, is still moving to the upside and will be a target to the downside if the momentum can continue in that direction. That comes in at 149.71. Again, it's moving to the upside, so be aware of that. On the top side, if you get back above the 150.28 level, that would be more bullish. Of course, the 150 level is also another key target, but ultimately 149.71, 100-hour moving average would need to be broken, along with the 200-hour moving average. Might as well put that in the pot as well, in order to increase the bearish bias. Note that the 200-hour moving average did a pretty good job of holding support through here before it's moved to the upside, so it has some history to it on the move to the upside. So if I were to characterize the dollar versus yen, the bias still remains more to the upside above the 100-hour moving average. Get above the 150.28 level, and things may start to kick back into the in the upward direction. Finally, let's take a look at the sterling versus US dollar. I spoke to a moving average that was broken, and that moving average was the 100-bar moving average on the 4-hour chart in this pair. Note that on both Monday and Tuesday, the price did find support buyers against that 100-bar moving average. We also found support buyers against it right through here. So there is that history of that 100-bar moving average helping to find support in this pair. So when we broke below it and trading here today and broke below the swing area through here, the buyers turned to sellers a little bit, and we started to rotate back to the downside. This level now becomes our ceiling, our resistance level for the sterling versus US dollar. As long as we can stay below that level, and the bias in the short term remains out to the downside. I'm not saying that the sellers are now in firm control. They are not. They need to work on other levels, including, in particular, the 200-day moving average down here, 128.017. In trading, going back, let's see, 1, 2, 3 weeks ago, the price that broke above or traded above and below that 200-day moving average as the market tried to figure out which way you want to go before rotating to the upside. So that traders remember that, and they'll start to look toward that level if the selling can continue, if the price can stay below the 100 bar moving average on the 4-hour chart. That's going to be your key for trading today. My name is Greg McCloskey with a technical look at 3 of the major currency pairs to kickstart your day. Good fortune with your trading. Bye-bye now.